Good evening. It's Friday, March 20th. I'm sitting out on the balcony here, 6:51. It's actually 74 degrees. You can see the sun on my face. 20th episode of my podcast on March 20th. I've been busy. I've had some family issues when my daughters has to go see a doctor on Monday. It's been having some issues, but the markets have also kept me busy. We're actually going to a music performance tonight, so I think I'll post this if I can right when I'm done, but if not, um, I'll post it when I get back we're going to like a concert or show tonight. So I'm sitting on the balcony waiting for my family to be ready. There was um, obviously a drawdown in the markets today, and it was notable because it just seemed like there was deleveraging across the board. So a lot of things that have gone down a lot actually were relatively resilient today. But the things that have been over owned were selling off, and we've seen that lately in precious metals equities, but also things today like SanDisk sold off sharply. It had been holding up really well. Semiconductors have been holding up really well. The memory stocks have been holding up really well, but today they were sold and sold aggressively. Now, having said that, almost 2 weeks ago, was when WTIC oil spiked on Sunday night to the 118 overnight onto Monday morning. We had been in that range for the broader equity markets. The low was that Sunday night around 10 p.m. and then the high was that Monday at the close. Today we kind of broke the low, but then at the close at the last hour we got a little rally. So I'm curious what's going to happen on Monday. But what wanted to point out was that on that low, roughly 2 weeks ago, in pre-market trading, SanDisk, which has been one of the market's hottest stocks last year and this year, it got down about $500 pre-market, in pre-market or after-market trading. So even today, I think it closed at 712 or something like that. So that gives you some perspective. So there, if we get continued selling, I would imagine the things are that have been winners are going to be sold here. And alternatively, it's difficult too because the market is really correlated to what oil prices are doing now. Oil prices were up today. And when there's some resolution um, with the Strait of Hormuz there, it is going to, there's going to be an unwind the other way. So it's an easy market to feel regret in day to day, because there's so much volatility and it's natural to want to get more defensively positioned. But a lot of things have gone down a lot already. I was mentioning some stocks to a couple of folks I talked to, but like, Adobe's down a lot, Restoration Hardware is down a lot, Cleveland Cliffs is down a lot. Um, Even something like BTG, B2 Gold, everybody was pretty excited about that, and it got to 6, and now we're below 4. So there's things that have really pulled in, and so there's some opportunities that are developing. And, as we saw with the tariffs last year, you had a aggressive sell off, but then that was unwound pretty quickly too. So that template has existed since COVID, the COVID era. And it was even quicker with the tariffs than it was with COVID. Although it was roughly, for both those, it was weeks, that the turnaround happened. So it's, as hard as it is, you want to be getting your shopping list out right now and looking for, stocks that have sold off. I want to talk to Eric McBeard. I haven't spoken to him, but he had mentioned a little while back, like SL Green is another one. SLG, I bought that for my cousin's family DCA portfolio, and it's down, 30% plus from its highs here. So monthly dividend pair, and rates should come down when oil comes back in, and if oil causes a recession, I think rates will come down. Now, I don't think that's the base case right now because people have to remember that oil averaged From 2008 to 2014, oil averaged $100 a barrel. That's West Texas Intermediate crude oil. Today, in inflation-adjusted terms, it'd be $150 a barrel. So we're as painful as it seems right now. Oil prices aren't that high. So keep that in mind. It may feel like worse than it is. The economy probably has a lot of tolerance, a lot more tolerance than many expect for these higher energy prices. And natural gas, really isn't up that much. And I think natural gas is actually the biggest beneficiary here, because if there was any fears of a LNG glut, which you had some analysts advocating last year, that's gone now. And as we saw with the Freeport facility, when these things are damaged and have to be repaired, the timeline is a long time. So the global natural gas market, I think, especially for North America producers, looks as good as ever. Obviously the LNG names have moved. Woodside, which we owned directly and indirectly because Woodside bought Tellurian, but any of those, Cheniere, which I've owned for a long time, just a position in, and then Venture Global, Next Decade, they've all done really well here, and essentially those are moving, but the U.S. producers are moving too, even though natural gas itself hasn't moved. Now I know like Antero's got a lot of liquids production. The liquids uplift is helping. But eventually here, I expect natural gas to be the prime beneficiary from the destruction and the energy infrastructure that has to be rebuilt, after we get out of this kind of crisis phase. So hopefully everybody's hanging in there. I love this time of year. Indian high school basketball is one of my favorites. I love March Madness. I was watching March Madness yesterday. Spring is nice. I mean, it's unbelievable. We had snow on this balcony just on Monday, and it's amazing. I was getting ready tonight and I was hot. I was like, I can't believe it. It's like 74, 76 degrees. So weather's changing, markets are changing, but that's part and parcel of being an investor. You have to be able to deal with the volatility. You have to be resilient. I always talk about resiliency is very important in the markets. And that's part of the great thing about our group, is you can bounce ideas off people, and we've had experience in different areas, and when things feel the worst, we can vent our emotions, and when things feel the best, we don't talk about it. So, I am going to wrap this up, but I wanted to check in with a quick update. Appreciate everybody in our group. Thankful and grateful, for this forum that we have. And I'm going to try to write something, pretty soon here to categorize my thoughts. But they're really not too much different from the last piece I wrote, meaning that normally after these conflicts are over, you resolve to the upside. That's been the typical, way things have played out. So with that, happy Friday, 20th episode on Friday, March 20th. Spring, first official day of spring is tomorrow. We're going to get another round of colder weather here, but you're starting to see the ebbs and flows. We're getting a lot more daylight every day. I know we had the change in daylight savings time, but it's 7 p.m. right now. The sun's still out. So again, have a nice weekend and try to get some sleep, and just think about the opportunity here, not the the drawdown in your portfolios that you're seeing on a daily basis. And obviously some things are working too, but I mean there's challenges and there's going to be volatility. So take care. Bye.